Hello YouTubers and welcome to my channel. This is the Prince of Forest, and in today's video I want to be telling you something I don't think you've had before. Okay, you had it before. It's called risk management, but I want to be showing you a new version of risk management. And in today's video you'll be hearing something you've not had before, I guess. Under the risk management, there's risks inside the risks, so let's dive into the video. Risk management. I don't consider myself the best trader. No, I don't consider myself the best technical analyst or fundamental analyst. No, but I consider myself the best risk analyst. Now let's go in. Now whenever I want to take a trade, there are zones I want to take the trade from, and they are these zones. If the trade is here, then I'm looking to take the trade, but there's something I'm going to do. Now let me zoom in so you grab. And I'll be using this trade I took, the SP trade, the SP 500 trade, for example. Almost it didn't take profits, just few pips remaining. Now this is what I did, this is what I do. Now if you look closely here, if you look closely, you see a heavy order here. Can you see that order? It looks like a week off on a daily time frame. Can you see it? Okay, good. Can you see it here again? Now this is what I call order evaluation. I use it to know the right place to buy from. These weeks you're seeing here, if you check very well, you see that it wicked up like this. It went up immediately from here, it wicked up, and also from the downside it wicked down like this. Can you see it? Can you see it here too? Good. And also here's the support, here's the support, is a support, this is a support. So now what do? This week tells me where there are heavy buying orders, and I want to take the trade from there, and I want to see reactions from those points. Now look, I took the trade from here. This is where I took the trade immediately. I don't wait for confirmation, I just take the trade. Now this is what I will do. I always risk 2% in my trades. Now I'll create a box here telling myself, if this does not hold, what do I do next? I tell myself, within this box from here to here, which is my risks, which is 2%, I'll divide it into 2. Okay, let me take this box away. I'll divide it into 2, and I'll say, if here does not hold, if the trade does not move upward from here, if the trade does not move upward from here and start breaking, let's say it on a daily time frame. I'm on daily, I don't trade, I don't even go to 4 hours sometimes, I look at my daily. Let's say it starts going downward, like bringing out its head to this side, and now I'll start getting conscious of what to do next. Let's say it brings out its head like this on a daily time frame. Then I'll give myself another gap again to say this is the last defense line, like as if I'm playing football. I tell myself, this is my last defense line. If it tries to break it again, like tries to break it and tries to do as if it's trying to go down again, trying to bring his head below it, I will close the trade. And remember, I'm risking 2% here. I risked 2% here, and I told myself I will have my first defense, my first risk defense, and my second risk defense. Now if this thing tries to break out from here to the downside, I will close this trade, and I'll be losing about 0.9 to 1%, and I'm stopping. I don't care if it goes up again or not. And if it finally comes back up again to this side, I'll take the trade. I'll take the trade again and observe. But what am I doing? I'm trying to create a scenario whereby I see my risks and orders and positions, like this one here, this one here, and this one here. I see them as defense lines. I see them as my risk defense lines, whereby I don't want trade I don't want the trade to go beyond that. Like, I don't want my drawdown to go beyond these places. If they try to go beyond these places, I'm going to close. I want to see price react at this place immediately to give me good validation that here is correct. Now I took this trade from here and immediately it waked up. How did I know it's going to wake up? Because one, I'm seeing a week here and I'm seeing a week here. There are so many orders here, and these are the places that they want to buy from. And I took the trade, and right now we are up in profit about 4%, and I'm closing my trade very soon because election is close. Election is about 14 days from now, and election is not something you have to joke with. So when you are placing a trade, don't use tight stop loss. It's not healthy. Tight stop loss are not healthy. And try your best to take your trades from all these zones. Look for the orders where they are being positioned and take the orders. It's like common sense. If this trade is going to go against me, it will be falling, so I'll be careful and put risks evaluations around it. I will not wait until my trade hits my stop loss before I close. No. Close your losses short and hold your profits for a long time. I consider myself the risk management analyst ever, because one, I can't be in drawdown more than 2%. I am risking 2%, yes, I know, but I cannot be in a trade and it's going down 2% and I'm still in it. And remember, this is daily time frame. It takes a lot of time before this will go down to my stop loss, so I have a lot of time to think. So I'm advising you, trade on higher time frame and do not use low stop loss or small stop loss. This is the Prince of Forex, and I got you.